The US stock market has been on a tear, and one of the reasons why that could be is there's been a lot of hype around big tech stocks and the excitement around artificial intelligence and what all the things it could benefit in the future. You're listening to the Investing Mastermind Podcast. I'm Michelle Markey.
And I'm Signe Lundholt.
And you may be wondering, okay, sure, it sounds great that the stock market is up. Why is that bad? And the reason why is we're wondering if the stock market could be reaching a tipping point due to all the hype surrounding AI. What do you think about this idea, Sina? If this current run in the stock market is too good to be true, or if it's totally normal and we should expect AI to be here now that the future is here and everything's fine?
No, I definitely think there's a gold rush whenever a tech company mentions AI, that now there's a new AI model out or AI something. It's easy to see that this something is going on because the stock price immediately increase. The most recent example I remember is it's about a month ago where Apple announced that, or there were some rumors that there was a collaboration between Apple and I believe it was Meta, that Apple would be introducing AI to the phones in the future and things like that. And what happened? The stock price immediately increased because they mentioned, okay, now there's something tangible that they're going to do about AI. And we've just seen it over and over again. Companies that mention now they have this new AI model, boom, the stock price increase. For me, history does not repeat itself, but it does rhyme, is one of, the sayings. And for me, this rhymes with 2000. So around just before year 2000, there was, whenever a company would mention the internet or that they were doing something on the internet, the stock price would increase. And now the craze is about AI. It's a new gold rush. And in my opinion, that's what I can see now. I don't have any concrete evidence, but I know, Michelle, that you actually did present some concrete evidence about what is going on here. So maybe you want to introduce our listeners to some of that evidence.
Well, interestingly, I just looked at a email newsletter that I get from someone named Jesse Felder, and he's pretty prolific on Twitter. I know it's now known as X, but it's just still easier to say Twitter. But this Jesse person, he said that in the eyes of the shareholder supremacist, the CEO of a tech company isn't someone that builds tech, but a stage magician accountant hybrid that uses a combination of sleight of hand and vague promises to convince those around them that it is the future. So his point is, it's far easier and more lucrative to hype up AI than it actually is to build the future with AI. So in him saying that, he presents a few more stats around how there's supposedly a record amount of hype built into the valuations of the biggest stocks in the market. Like, he also put out the top 10 companies in the S&P 500 make up 35% of the market cap, but only 23% of earnings. And supposedly the divergence has never been bigger, suggesting that the market is at record bullishness on future earnings for the top 10 companies in the S&P 500 index. So what do we think about that, Sina?
Of course, that's numbers, and I haven't double checked the number, so he could be right. But I think it's super interesting. And, we've been discussing for a while that the S&P 500 is led by a certain group of technology stocks. And that's what's kind of pushing or increasing the S&P 500 all the time. What we can see is that currently, if we look at the CAPE ratio, or more popular, the Shiller PE, that the S&P 500 right now is trading at a PE of 36.25 when this podcast was recorded. So of course, you'll have to go in and check what is the most recent. And the Shiller PE is high right now, and it's only been this high twice in the past. So this is the third time it's above 30. And the other two times where it was above 30 was 2000, which, we just talked about the IT bubble. It was above 30 at that time. It reached 44 back in December 1999. That's known as the IT bubble or the IT crash back then. And the last time was in 1929, so almost 100 years ago, where it reached 31.48. And at that time, we know it as the big crash. Right now is the third time. We don't know what's going to happen. Nothing might happen. Maybe we're just going to continue moving upwards and there's no crash coming, or maybe it's just going to go flat. We don't know that. But this is not normal. That's all I can say. It's not like this always.
For sure. Yeah. And we're not predicting anything, even though it's July 2024. And a lot of people are looking forward to the Fed cutting interest rates because they think that will make the markets go up as soon as interest rates go down. That could happen too, in that we just keep perpetuating this elevated market. And that could be our new normal of maybe this is just how it is. Like everybody will pile into the top 10 stocks of the US stock market. And that just is how it goes, and leaving the rest of the stocks in the S&P 500 behind, as there's been some suggestion that the S&P 500 is getting less diverse with more of this focus on tech stocks, or in order for companies to do any bit well in the modern future that we're in, is that they need to all move toward becoming more tech stocks. So if someone is still being an old world type company, maybe it's right for them to kind of fall behind compared to all the promise that tech stocks are laying before us. But at the same time, we still need to eat. There's only so much tech you can apply to food stocks, let's say. There's only so much tech that can revolutionize our worlds. So it's starting to feel a little bit like all this gold rush, like you said, around AI hype is sort of making the chickens come home to roost. Like it just kind of making me think like, how much more tech can, say, Tyson Foods get with, when they make the chicken nuggets for household families? Like I'm sure they use some modern equipment, but like, can they use AI to make our chicken nuggets better? Like, I doubt it. Chicken nuggets are not going to be revolutionized by AI, in my opinion, unless, you get the machines to think for themselves and are like, ooh, based on the latest chicken crop, we can only make this amount of nuggets, so we need to increase our price on this. Like maybe you can use some AI tools to kind of predict some of your modeling, but fundamentally, I don't know if the entire economy is necessarily able to take advantage of all the promises that AI has made. So in spite of that, like a lot of things that are apparently being seen is this Jesse Felder person has mentioned that there's a 3-month correlation between the S&P 500 returns and the number of advancers being at an all-time low. And the only period that remotely resembles this came in the third quarter of 2000. So that might be a little confusing to think about what all that means. But basically, the point is that the rest of the market is not keeping up with the few companies that are advancing. And we are assuming that the few companies that are advancing are the ones that have been hyped up more, like Nvidia and Apple and Google and Amazon and Microsoft. Like a lot of those that they call the Magnificent Seven, those seem to be thriving much more than, say, your everyday, say, pharmaceutical company or Visa and MasterCard. Like people are not necessarily spending so much more, because of this AI hype. A lot of people who do have money are maybe just seeing that these stocks have been going up. So, like you said, when Apple announced that they were including some AI thing, or that Tim Cook was going to do $110 billion of stock buybacks, everybody was like, oh, that's great. That means that this stock is more valuable and let's pile into it. Or whenever they announce that they're going to do a stock split like Nvidia did, all of a sudden that makes people want to buy it more, even though it hasn't necessarily generated more value to justify a stock split. But people get lulled into perhaps a false sense of assurance that these stocks will continue to do well in the future, even though it's starting to feel like a little bit of a trap. So I might sound kind of bearish, but based on some of these metrics we're talking about, like with Signe mentioning the Schiller PE, and also some of these stats from Jesse Felder, it could lead one to have some caution right now. Like we're not saying don't invest. You could still invest. Like who knows? any of these people who are trying to share these suggestive figures could still be wrong, but it still warrants for some interesting reflection and discussion. So, more than anything, we're just trying to question what could happen. Like, nobody knows what will happen. It just makes you wonder, what should we do in these times, Sina? What do you think about what we should be doing?
Well, I think for sure, people on the internet ask, should I buy Nvidia now that the stock is down? I guess the stock price declined a bit. And in order to actually answer that question, what you need to do is you need to, first of all, understand if it's actually a good company. Maybe the company isn't that great. So we would have to understand that first. Are the fundamentals in place, and understand, is this a thriving business? Is this a healthy business that would be in it for the long term? And then once we've understood that, which is, can be quite difficult and take some time, then we could figure out, okay, but what would a fair price be to pay for this security, this stock, like Nvidia? And maybe find out, oh, okay, so the most recent decline was maybe just a drop in the water. Maybe it's not really down and trading at a price where you get a really good discount to the actual business value. So that's something we could do. And when stocks are overpriced right now, it's the perfect time to actually go in and try to figure out what is it worth, because you won't be able to buy it anyway. So you can spend a lot of time trying to understand the business better. I also want to just go back to some of the things you said, Michelle. So first of all, recently we discussed Nike and Lululemon and how they were reporting that business wasn't well. So people aren't spending money. And I just want also listeners to think about, when was the last time that you actually, purchased something that would contribute to AI? Because when right now there, people aren't purchasing much, and that means a lot of companies aren't innovating. They're deciding to not innovate, but instead improve the products they already have. For example, with Apple, they decided to stop innovating on the driverless car and instead focus back on some of their core products, because people aren't spending money in an environment where people are spending a lot of money. Businesses can innovate. And that also goes back to some of what you're saying about CEOs are talking about the future, but maybe not innovating, because there aren't a huge sum of money to innovate for these days. They have to be really frugal. So that was one thing I wanted to touch upon as well. And then the last thing, which you said about how AI wouldn't put food on the table, actually remind me of a quote from Warren Buffett, where he said back in the day that the internet won't change the way we chew gum. And it's exactly to your point, Michelle, that AI won't change how we eat. And eating is something that humans need. We need to put food in our mouths. We need some basic things out there that we're always going to need. And it's something to keep in mind. And of course, what you could say is, well, we also maybe to some extent rely on AI now, somewhat simpler AI models to make our lives easier. We also do need AI, but I think a lot of it out there is just, again, back to companies that want to say, ooh, we're doing AI, and then they might have, are using ChatGPT or, the most recent version of Microsoft's AI program.
Those are fabulous points, Sina. I really value what you said about how thinking about the consumer, what they're actually spending their money on. And chances are, I mean, maybe some people have paid to play around with ChatGPT, and maybe some people are using some more fancy AI tools out there. That's very possible. Some people could be using it for very legitimate money making purposes, and that's great. So we're not trying to poo-poo the idea that AI hasn't been making some impact, but fundamentally, if you think about your everyday, I mean, I'm honestly not even using AI as far as I know. Like, I'm not yet there. So in my everyday life, I don't have a particular purpose for it, but maybe I could be convinced otherwise, that there's more to use it with. Like, maybe in gaming, there's potential of, like, if someone's a gamer, maybe they use it more often or have the potential of using it more often to come up with certain strategies, or maybe it has applications in trying to figure out medical treatments for people in AI suggesting like, "Oh, did you know that this drug is a contraindication for another drug? Maybe you want to consider this other thing to help the patient improve in their medical condition." So there's so much potential of it, but just right now with where the stock market is, it seems like we're walking a fine line of where we could be going. And another sort of stat that Jesse mentions is how NVIDIA recently earned the most valuable company in the world status with an enterprise value of $3.3 trillion, dollars, a record 11.7% of total US GDP at its recent peak on June 18, more than twice as high as Cisco's achievement in 2000. So when we think about that, is NVIDIA's contribution to the American economy worth about 12% of all US output? I doubt it. Like, there's so many people there doing so much important stuff, like child rearing or taking care of children and putting foods on the table and mowing the lawn and whatever it is that's an output that maybe people are not getting paid enough for. Those are real contributions to making our economy better. And yet, you don't see the money flowing into there as much as it currently is in something like the Nvidia stock. So it's just breathtaking how much, if you really think about it, does that valuation really justify where we are in the market? And Sina and I would probably say no. I mean, I don't want to speak for you, Sina, but my hunch is that it feels a little bit like we're in a fantasy land. And, you can have fun in a fantasy land, like nothing wrong with going to Disney World and having fun with your family, unless it's extremely hot right now in July 2024 and you could be really miserable. But, you know, if if you're not kind of in a miserable 100-degree weather place, which is about 38 Celsius, maybe you're doing all right. I mean, so it's something to think about of, thinking what's realistic? What do we think we should do to kind of keep a firm head on our shoulders? And as long as we're not getting sucked into the hype, maybe we're doing okay. What do you think, Sina?
I'm just shocked to hear that. That's actually a great number to know because I think that Nvidia is worth, that compared to the American GDP is just like, come on, people, wake up. But yeah, it just shows, how the stock market doesn't always make sense. It's not like I remember also Warren Buffett saying in the perfect world, the stock market would follow, the US stock market would follow US GDP. And we can just see that it absolutely does not always make sense out there. So make sure, people, to do something that makes sense. And maybe you bought Nvidia at a time where the stock was trading at a fantastic price. That actually happened in a couple of years ago. So maybe you did buy into the company at that time, and that's great. Like, that's awesome. Congratulations. We're not saying that there's anything wrong with that, and congratulations for an amazing buy. We're just saying that right now, something ridiculous is going on out there, and be careful about what you're spending your money in and try not to jump on that, potential landmine.
Bandwagon?
Yeah, bandwagon. So, do you
Yeah.
have
And
anything to add, Michelle? Because I can see we're coming towards the end of the show today.
yeah, the final point I want to make is some other people out there who publish things are people like Jeremy Grantham, a former manager at GMO, and he put out an article in March 2024 about what happened to our COVID bubble of 2021. So there were, some bubbles that feel like they've occurred in the recent past, and maybe the bubble started to deflate in 2022 with Russia invading Ukraine and some of all what happened in 2022. And then all of a sudden, when the AI hype started coming out, everybody was like, whoa, maybe this is the future is here already. And now we need to all pile into stock. So it feels like the bubble reflated since 2022. And maybe it just hasn't burst yet. It's quite possible that just like it took a little bit of a while for the bubble to burst in 2000, it's possible we're just kind of extending the inevitable. And a lot of what kind of eventually happens when consumers stop spending money and people suddenly realize that we're no longer in a fantasy world is the bubble might pop and a recession actually does happen someday. So, not that we're saying that the good times can't last forever, but it's unlikely that the good times will last forever. So that's all I want to kind of add is, we might have forgotten that maybe the bubble's over. Maybe this is the start of a new bull market, which could be true, but who knows? Like I don't really know for sure, but like Sina mentioned, let's just be careful and try to make as wise of financial decisions as we can possibly make given the sort of current questionable circumstances. So, with that, we hope this gave some food for thought. If you want to share some of your thoughts and ideas with us, feel free to find us on Instagram on the Investing Mastermind account. You could talk to us there or also leave comments. If you're watching this podcast on our YouTube channel, feel free to let us know what you think. We'd love to hear from you. And with that, I mean, no matter what happens in the stock market, make sure to enjoy the summer because you only live once and there's no use in fretting about what will or won't happen in the stock market. Let's still continue to enjoy our summers nonetheless. So, with that, Sina, why don't you send us off?
Well, I think it was a great way to actually end this. So have a great summer, everyone. We'll be back on Tuesday. If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.